It looks to me that there's a run on gold, physical gold, and I guess we can speculate why. It could be, the Treasury needs to do an audit of its gold, and a lot of it left, so they need to bring it back. Or investors are just concerned about all the uncertainty, geopolitical, trade wars, and whatever, and the possibility of even a major war. I don't like talking about the Third World War, but President Trump even mentioned it when he was having a chat with Zelensky the other day. He said, you're going to, trigger World War III. During war or major conflicts, nobody accepts paper. People need, countries need gold to pay for their war efforts.
Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pinned comment. Stay ahead of the curve. Don't miss out.
I guess it's been going on since I think mid-November or sometime in December, and we only really learned about the problem on the LBMA or in the London Bullion market back in January 29th, when an FT report or article came out and said that the spot delivery was had been extended to from up to 4 to 8 weeks. So instead of T plus like 2 or 3 days, 4 to 8 weeks. So there's definitely something wrong there. And yes, I reported on that right when that came out. I thought it was really significant. And I'm not trying to brag, but I said at the time that it was the most important development in the gold market, maybe since Gordon Brown pre-announced the sale of half the UK's gold back in 1999. Yeah, and from what I know, the delivery on the LBMA and the London vaults is still delayed. And I think, Elijah, it just shows that there's a de facto default right now. And I'm not saying there isn't any gold there. I think it's just the way they rehypothecate, or they fractional reserve gold, or they trade paper gold, is basically kind of been exposed. Maybe not because people have been talking about it like I have and many others, but because for some reason someone in the U.S., we can speculate who that is, someone wants the physical, and they don't want just the physical in the vaults, or through the EFP, which is like a mechanism to trade between COMEX and the LBMA. And EFP stands for exchange for physical. But when I worked in the futures market, I can tell you that when my colleagues did EFPs, I wasn't too involved in that. It didn't mean physical. It just meant another paper scheme. But now the people, whoever's taking the gold in the U.S., they want it out of the LBMA vaults. They want it into COMEX and out of the COMEX vault, because a lot of deliveries on COMEX prior to now were just done through the vaults. You just change, it's going to go from account A to account B. But the gold itself had always stayed there. So it looks to me that there's a run on gold, physical gold. And I guess we can speculate why. It could be, the Treasury needs to do an audit of its gold, and a lot of it left, so they need to bring it back. Or investors are just concerned about all the uncertainty, geopolitical, trade wars, and whatever, and the possibility of even a major war. I don't like talking about the Third World War, but President Trump even mentioned it when he was having a chat with Zelensky the other day. He said, you're going to, trigger World War III. And from what I've learned and studied in the past about gold. And Alan Greenspan once said that during war or major conflicts, nobody accepts paper. People need countries need gold to pay for their war efforts.
According to Mario Innecco, one of the major factors driving the price of gold is the rising demand for gold reserves from central banks, particularly within the BRICS nations. Notably, China's central bank has increased its gold holdings for the fourth consecutive month in February. According to recent data, the People's Bank of China added 0.16 million troy ounces to its gold reserves, signaling the continuation of a deliberate strategy to diversify its financial assets. After a 6-month pause in its gold purchases, this move marks a return to a pattern of steady accumulation, which had been a key feature of China's monetary policy for nearly 2 years prior. Innecco argues that these central banks' growing emphasis on gold represents a strategic effort to reduce their dependence on the US dollar. This shift is particularly evident among BRICS nations seeking to strengthen their economic sovereignty by bolstering their gold reserves. As these nations aim to mitigate risks associated with the dollar's global dominance, the accumulation of gold acts as a hedge against currency volatility. This trend will likely impact global gold prices as increased demand from central banks drives up the market value of the precious metal.
I mean, if we go back the last 3 years, the big money, i.e. the major central banks and governments of the world, like especially the BRICS and BRICS-aligned countries, they've been buying the most net gold since the beginning of the Bretton Woods agreement in 1944, 2022, 2023, 2024, record amounts. And I think personally, there is a probability that U.S. Treasury is coming, new Treasury, new administration, and they know about this. We've seen Marco Rubio, prior to him becoming Secretary of State, say that the BRICS are not going to use the dollar. The Treasury Secretary, in an interview prior to even the election, Scott Bessent, he said that he expects Bretton Woods-like realignment. What does that mean? Well, it means that we're going to have a new monetary conference amongst the major powers of the world, just like we had towards the end of World War II. And whenever there's a realignment, monetary realignment, it means that the old system is dying. So the current system, or the old system, is the fiat debt-based dollar. And and now, so it could be I think it's a good chance that it is the Treasury bringing back its physical gold, but it could also be very heavy hitters out there. One case in point being Warren Buffett, whose company Berkshire Hathaway has $334 billion in cash, and I saw that in his recent recent letter to his shareholders at the end of the year. For 2024, it came out about a week ago. He said that paper money is always, you can't trust paper money nor government bonds. That's what he said. And I think that was very telling, despite the fact that he's holding a lot of the $334 billion in cash and treasury bills. And of course, he has said in the past that gold, you mine it, you bring it out of the ground, and then you refine it and turn it into bars or coins, and then you put it. His father was a congressman from Nebraska, and he was a sound money advocate. So I'm sure Warren Buffett knows about gold. So as for the small investors, they're still asleep at the switch, except the people that watch our channels. I would say they've been awake for many years. But now maybe you could be right. They could be starting to look for alternatives. And why do I say that? Well, because it looks like the general stock market is starting to keel over. And I remember when I bought gold for the first time in '02, the reason I did it is because I sat down with my wife and looked at my private pension, which hadn't done well after the dot-com bubble burst, not because it was invested in the dot-com bubble stocks, but all the stock market suffered. And for some reason, we said, why don't we buy a little bit of gold to diversify? So yeah, we could be close to that. And yeah, that's how I see it.